Hello, everyone. Welcome to our continuation of the module 5 on taxation problems. Okay, so we will be presenting to you today some exercises on taxation, and then let's try solving it. Before I present to you the answers, I want you to answer it by yourselves first, and then on the next video, I'll be presenting an explanation of the answers, the rationale of the answers to to these taxation problems. Okay, so for the first problem we have, okay, what is the first problem? Okay, problem one. Benito has the following data from his hardware business and compensation income for the year 2019. Okay, so the data presented are the compensation of 1 million, gross sales of 2 million, non-operating income of 100,000. The requirements compute for the following: gross taxable income and tax due from compensation and hardware using the two options. Okay, so you use two options. First, the 8%, using the 8% of the gross sales, and the graduated tax table. Okay, so I think we have to use the formulas that I have presented in my previous lessons. Okay, so problem one concerns what? It is a compensation, mixed income. I think this is a mixed income because mixed income earner. He has income from his compensation, and this he has income from his hardware business. Okay, so but the requirement says you need to use the two options, the 8% and the graduated tax table. Okay, so I think that's very easy. On the 8% method, you use the 8% as the tax rate. Okay, then but let me guide you in answering for the compensation income, that is 1 million. When you refer to the graduated tax table, so that is how much is the income? Yeah, the compensation is 1 million. You go to your what's this? To your tax table, how much is the salary? How much is the tax rate for 1 million? Okay? So that's it. You use your tax table, and then I think there is a tax exemption there, and then multiply it by the tax rate. So that's it. That's a clue for problem number one. And here in problem number two, okay, it was cut, but I think the one written there is de minimis benefit, pure compensation income earner. Problem two. What do you mean by de minimis benefits? So these are the benefits given by the employer to the employees, such as uh, clothing allowance, rice allowance, and there are other benefits too. Okay, so how shall we solve this problem? Uh, the salary per annum is 180,000, and then there are other benefits. The pag-ibig, there are other monthly contributions, SSS, pag-ibig, PhilHealth, 15,000, the 13th month pay of 10,000, overtime pay of 10,000, clothing and uniform allowance, and rice subsidy as your de minimis benefit. So what is the requirement? You compute for the taxable income and the tax due of Melissa. How will we do that? When we say de minimis benefit, there are limits to that. These are the benefits given to the employees. We have here rice subsidy of 30,000. How much is the rice subsidy limit per month? I think it's 2,000 per month. So 2,000 times 12, there is supposed to be 24,000. But what is given here is 30,000. So what will we do with the 30,000? Okay, clothing and uniform allowance, how much is the limit for the clothing and uniform allowance. I think it's 6,000 per month. But the one given in the problem is 10,000. So what shall we do with these things? Okay, did they exceed the limits given by the de minimis benefits law? Okay. And then look at the salary per annum, 180,000. What is the tax exemption for the salaries of minimum wage earners? Yes, it is 250,000. But it shows here 180,000. That means this person, Melissa, is what? She tax exempt or does she have to pay taxes? Okay, I'm giving you the hints or the clues so that you can solve the problem. Okay, next we have, okay, mixed income earner. Problem 3, mixed income earner. I think this is Jacob has the following data from his hardware business and compensation income. Okay, so G- Jacob is a mixed income earner, taxpayer, but he has what does the problem says? Compensation is 1 million, gross sales is 2 million, 13th month pay plus bonuses is 90,000, cost of sales 100,000, operating expenses 100,000, non-operating income is 100,000. Compute for the following: taxable income and tax due from compensation and hardware using the two options. What are the two options that we have? The 8% tax rate or the 0 to 35% or the graduated tax table. Okay? So these are the clues that I'm giving you now. Then we have problem 4. Mixed income earner again. Benito has the following data from his hardware business and compensation income. He has an income of 1,800,000, gross sales of 2,700,000, non-operating income of 100,000. Compute for the following: taxable income and tax due from compensation and hardware using the 8% tax rate and the graduated tax table. Okay, so let's try solving it. Next, we have Benito. Okay, where are we now? We're in Benito. Okay, what is the problem in mixed income earner of Benito? Do you see any problem here? I think it's very easy. First, you solve for the compensation of 1 million. Okay, then what will you do with the no, this is Benito. Benito with a compensation of 1.8. I think this is here. It is here 1.8. What problem 4? So that is already, yes, 1.827. Okay. So 1.8, 1 million, you have to refer to the graduated tax table again. Then the excess over 800,000 is 1 million. Then you multiply it by the tax rate. So you use the graduated table to determine what tax rate do we use for Benito. And for his hardware business, we can use the 8 when we use the 8% tax rate. What do we do with the non-operating income? We add it to the gross sales. Okay, so from there you can continue solving. Okay, then we have SEP or self-employed individual or professional. You have two options to use: the 8% tax rate or the graduated tax table. It says here that Lita has a burger store and gives notarial services in 2018 with the following income. Okay, so Lita has yeah. Then the requirements are you have to compute for Lita's taxable income and tax due using the 8% option and the graduated table. So what are the clues here that we should remember when we try to solve this problem? Okay. So 800 plus 300, so that is 1,100,000. Okay, how much is the tax exempt limit? And from there, you can now compute for your tax due. Okay, using the 8%, very easy, just use the 8%. When you are asked to do the option number two, or using the graduated tax table, the same thing, you get the tax rate based on the level of income of Lita. Then we have another problem, number 6. Um, this is again about self-employed, individual, and professional. Has a Bea has a burger store and gives notarial services in 2018 with the following income. Gross sales from her burger store is 500,000, and gross receipts from her notarial services is 200,000. But there is a cost of sales of 200,000 and an operating expense of 150,000. The requirements are: compute for Bea's taxable income and tax due using the 8% tax rate and the graduated tax table. Okay, so I think it's the same. We have to compute for the burger store is 500,000. The gross receipts is 200,000. We just add them. And how much is the deduction? Okay, there is 250,000 deduction. Then the net taxable income, multiply it by the tax rate of 8%. Okay, the same with the graduated tax table. Then problem number 7. Mario is employed at ABC Trading in 2018 with the following payslip. Okay, Mario. Where is Mario here? Okay. Then he is employed at ABC Trading. Okay, this problem concerns passive income. When it is a passive income again, what do we have to recall? It is an income. It is a type of income which you earn, but you don't have to actively work for it. Okay, in this case, the passive income is the what? Coming from the PCSO winnings. Okay, so salary per annum is 120,000. From that statement alone, you can now determine, is Mario tax exempt or not? Is he a minimum wage earner or not? Okay. Then there are contributions, mandatory contributions. Mandatory contributions are taxable or not non-taxable. Then we have the de minimis benefits. Ano, at 13th month pay and other benefits. The limit is up to how much? Okay, so up to 90,000. But in this case, it's only 10,000 and 10,000. And then you will notice there is PCSO winnings. What is PCSO winnings? Is that a normal income? No, it is what you call a passive income. Passive income has a tax rate of how much? So that's the problem. Ah, PCSO winnings has how much interest rate? No, not interest rate. Tax rate. It is 20%. Correct. So now you can solve your problem number 6. Okay? Then, so that ends our session for today. I have just presented the problems. I hope we can answer them. Okay? Do you think you can answer these 7 problems? Basing on the principles we have discussed last week. I will also give you a hint. Take note of the formulas I have presented before. Okay? So from here, I would like to thank you for reaching this stage. And don't lose hope. Don't be discouraged if you find difficulty in solving these problems. Okay? I'm always here to guide you as long as you keep on moving on. Next week, we have to move on to the solutions. We will solve these problems all together. Okay? And then we will be discussing the rationale behind every solution that I will be presenting in this video class. Okay, see you on our next video for the solution and for the rationale. Thank you very much, and God bless everyone.